Hello, good morning viewers. Again I am back and this time I am going to discuss about input tax credit. That is my second video which I have not covered in that particular video, the first video that I am going to discuss now. Now, first I am going to discuss availment of tax credit in case of new registration. Now, basically there are two types of registration. One is compulsory and one is voluntary. Now I am talking about compulsory registrations. As per section 18 subsection 1 clause A rule 40, a person who has applied for registration under this act within 30 days from the date on which he becomes liable to registration and has been granted such registration shall be entitled to take credit of input tax in respect of inputs, semi-finished, finished goods on the day immediately preceding the date from which he becomes liable to pay tax under the provisions of this act. Remember, no tax credit shall be allowed for capital goods. Now, if any person has applied for registration after expiry of 30 days, tax credit shall not be allowed of inputs or capital goods. I'm just citing an example. Say Mr. A becomes liable to pay tax on 1st August and has obtained registration on 16th August. Mr. A is eligible for ITC on inputs held in stock, semi-finished, finished goods as on 31st July. Mr. A cannot take ITC on capital goods. Now I am discussing about voluntary registration. As per section 18 subsection 1 clause B rule 40, a person who takes voluntary registration shall be entitled to take credit of input tax in respect of inputs held in stock and inputs semi-finished finished goods on the day immediately preceding the date of grant of registration. No tax credit shall be allowed for capital goods. Again, I am going to cite one example. Mr. A applies for voluntary registration on 5th June and obtains registration on 22nd June. Mr. A is eligible for ITC on inputs held in stock, semi-finished goods or finished goods as on 21st June. Mr. A cannot take ITC on capital goods. Now, for this purpose, the applicant has to submit form number ITC 01 within 30 days from the date on which he becomes eligible to avail ITC. Further, ITC 01 should be verified by chartered accountant, cost accountant if the total amount of ITC is exceeding rupees 2 lakhs. Now, as per section 18 subsection 2, tax credit shall be allowed maximum within 1 year from the date of invoice. Now, I'm just citing an example. Mr. A becomes liable to pay tax on 1st August and has obtained registration on 15th August. Mr. A is eligible for ITC on inputs held in stock, semi-finished goods, finished goods as on 31st July. Mr. A cannot take ITC on capital goods. Now I'm coming to availment of tax credit in case of shifting from composition scheme to normal scheme. This is governed under section 18 subsection 1 clause C rule 40. If any registered person has shifted from composition scheme to normal scheme, such person shall be entitled to take credit of input tax in respect of inputs held in stock, semi-finished, finished goods and on capital goods on the day immediately preceding the date from which he becomes liable to pay tax. The credit on capital goods shall be reduced by 5% per quarter of a year or part thereof from the date of invoice. Now, for this purpose, the applicant has to submit form ITC 01 within 30 days from the date on which he becomes eligible to avail ITC. Further, ITC 01 should be verified by chartered accountant or cost accountant if the total amount of ITC is exceeding rupees 2 lakhs. Now I am coming to availment of tax credit in case of exempt supply becomes taxable supply. This is governed under section 18 subsection 1 clause D and rule 40. If any exempt supply becomes taxable supply, in that case registered person shall be entitled to take credit of input tax in respect of inputs held in stock, semi-finished finished goods and on capital goods on the day immediately preceding the date from which it becomes taxable. The credit on capital goods shall be reduced by 5% per quarter of a year or part thereof from the date of invoice. Again, for this purpose, the applicant has to submit form number ITC 01 within 30 days from the date on which he becomes eligible to avail ITC. Further, ITC 01 should be verified by CA or CMA if the total amount of ITC is exceeding rupees 2 lakhs. Now, as per section 18 subsection 2, tax credit shall be allowed maximum within 1 year from the date of invoice. I'm just citing an example. ABC Limited purchased one plant and machinery for rupees 20 lakhs and paid input tax rupees 3 lakhs, and it is being used for exempted goods, but after 7 months and 10 days it is used for taxable goods. In this case, its tax credit shall be as under: total input tax rupees 3 lakhs less 5% per quarter on part thereof, that is rupees 3 lakhs into 5% into 3, it comes to rupees 45,000 that we have deducted. Then amount of tax credit allowed will be 2 lakhs 55,000. Now I am coming to a very important concept, which is a very important issue nowadays, that is ITC in case of amalgamation or demerger, etc. This is governed under section 18 subsection 3 rule 41. Where there is a change in the constitution of a registered person on account of sale, merger, demerger, amalgamation, lease or transfer of the business with the specific provisions for transfer of liabilities, in such cases the said registered person shall be allowed to transfer the input tax credit which remains unutilized in his electronic credit ledger to such sold, merged, demerged, amalgamated, leased or transferred business in such manner as may be prescribed. For this purpose, information shall be submitted in form number ITC 02 by the transferor, and the transferee shall accept it on the common portal, and ITC shall be credited to electronic ledger of transferee. Now I am coming to reversal of tax credit in case of shifting from normal scheme to composition scheme, or where taxable supply becomes exempt supply. This is governed under section 18 subsection 4 and rule subsection 4 and section 18 subsection 5 rule 44. Now the thing is, where any registered person who has availed of input tax credit opts to pay tax under composition scheme, or where taxable supply becomes exempt supply, he shall pay an amount by way of debit in the electronic credit ledger or electronic cash ledger equivalent to the credit of input tax in respect of stock. In case of capital goods, remaining tax credit has to be reversed, taking the life to be 60 months, and part of the month shall be ignored. After payment of such amount, the balance amount of input tax credit, if any, lying in his electronic credit ledger shall lapse. For this purpose, the applicant has to submit form number ITC 03. I'm just coming into an example. XYZ Limited purchased one plant and machinery for rupees 20 lakhs and paid input tax rupees 3 lakhs. And it is being used for taxable goods. But after 1 year and 2 months and 10 days, it is used for exempted goods. In this case, tax carried to be reversed, and it shall be remaining 60 months minus 14 months 10 days is equal to 45 months 20 days. Ignoring 20 days, we are having 45 months. Then it will be rupees 3 lakhs multiplied by 45 divided by 60 is equal to, it comes to rupees 2 lakh 25,000. Now, again I am coming to another point. Reversal of tax credit in case of supply of capital goods on which tax credit has been taken. This is governed under section 18 subsection 6 rule 44. In case of supply of capital goods on which input tax credit has been taken, the registered person shall pay an amount on the basis of remaining life, considering total life to be 60 months. However, part of the month shall be however part of the month shall be ignored as per rule 44, or the tax on the transaction value of such capital goods, whichever is higher. Now we are coming to our last, that is reversal of tax credit in case of cancellation of registration certificate on which tax credit has been taken. It is governed under section 18 subsection 6 rule 44. As per section 29 subsection 5, in case of cancellation of registration, the registered person shall pay the amount of ITC taken with regard to capital goods or inputs lying in the stock. An amount shall be computed in the manner given under section 18 subsection 6 rule 44. In case of cancellation event, if the goods are lying with such person, it will be deemed to be a supply. The registered person shall, in case of capital goods, pay an amount on the basis of remaining life, considering total life to be 60 months. However, part of the month shall be ignored as per rule 44, or the tax on the transaction value of such capital goods, whichever is higher. That is all about. Thank you.